Hello traders. Today is the 10th of February 2013 and the time in London is 18:55 p.m. In New York 13:55. Happy Sunday to you all. This video is about the psychology of a bearish butterfly pattern. Now, when we are using a pattern, either Elliott wave pattern or stochastic a pattern or a fractal pattern, we want to understand the pattern. A lot of traders, know about patterns. They will tell you 78.6%, 61.8%, projection 1 to 7%, and they know all this. But these traders cannot make excellent decisions. Why? These traders know also that they can trade, but they keep making mistakes. Why? We want to understand the pattern. We want to understand also the price. Let's get started with the psychology of the butterfly pattern. The psychology of the bearish butterfly pattern. In this case, we are looking at bearish butterfly pattern. If you have not watched the video that I call the formation of a bearish butterfly pattern, you may do so before watching this video. Alright, so this is a bearish butterfly pattern completed right here where I put my red lines. We want to discuss the psychology of this bearish butterfly pattern. You can see that the price display high here. There was an up move. That's the first condition for the butterfly pattern. The bearish butterfly pattern will take place after an uptrend and a correction. So the price went up first and then pulled back. It's a kind of correction, And then we have now A, B, C, D to form the bearish butterfly pattern. The bearish butterfly pattern will take place at the end of a bullish trend. Alright, here it is on top. It's the right place. Now the psychology. The price display the high here. If I move it correctly here, you can see this was a high in the up move before the correction. Now in the C to D, talking about the butterfly pattern, the price, the number one indicator, has displayed a new higher high. So the previous high was here. Let me put a blue line here to highlight, the previous high. Attention carefully. It's about understanding. Price display high here, Now it displayed a new higher high after displaying, a higher low here. The price went to display a new higher high. At this point in time, what trader will be thinking? Trader will be thinking that this is a breakout. Breakout crazy traders. Let me say, breakout crazy traders. Now, let me make fun of them. Breakout crazy traders. Nothing wrong with it, but I'm just making fun of them a bit, So, they will be positioning themselves here that the price will continue the movement to the upside. Now, Fibonacci traders that understood the bearish butterfly pattern, aggressive Fibonacci pattern trader will place order here to sell. In fact, the bulls that were buying before will take their profit here, and the aggressive Fibonacci pattern trader will sell here because they know that the bearish butterfly pattern is completed here. So there is a kind of fight going on here. You have the breakout traders trying to buy here to push the price up. You have traders that were in a trade before that understood the bearish butterfly pattern taking profit, which means they are selling. You have aggressive bearish butterfly traders coming in to sell, and the breakout crazy traders buying here. Instead of waiting for the price to break above the red line to retest it and to wait for a valid signal to buy, they will buy here because they think that the price break above the previous high. You understand what is taking place here? Why is it a bearish pattern? It is a bearish pattern because when does it become bearish pattern? It becomes bearish pattern, not because it reached the target zone, but once we return below the blue line, because this is the previous high, language of the price, a high, a higher high, price return back below the previous high, a weakness is telling us the weakness of the bullish momentum. So those who understand the language of the price, they see going back below this blue line, they will say, what's going on? It's getting weak. Alright, so if you have a valid trading tool, you'll know how to play it here. You don't want to force it. You want to be very gentle. When you're going to enter the market, behave like a cat. Because you see, blah, 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 before. It didn't go in straight line. So the best place to sell, in fact, was here. Look here. The price D below the blue line, telling us that the bearish momentum is weakening. We will say to you, we will say to the price, confirm it, which will retest it and give us a signal here. This is what all the professional traders that want efficient market, or the cautious traders that want efficient market, those who don't want to gamble, those who are very patient, those who are very careful with their money, we will say, please give us, okay, the retest and the confirmation. Here it is. It came back to retest the blue line, and then confirming with, you see, this bearish engulfment. All right, you see, total retracement of the bullish. So here we will be looking for opportunity to sell, of course. If you retest it here, and the TSTWSY008 give us a sell signal, or TSTW24 give us a sell signal, we will take it, because this is a low risk point for high probability trade setup with excellent reward. Look, he rolled it down nicely. It didn't go down in straight line, as you can see. Went down, went up, went down, went up, went down, went up, went down. In one cycle, we have mini cycles. All right? Though the price is going down, so how do we know it's still bearish? It will stay in a bearish channel. That's how we'll know that it is still bearish. We want to give priority to sell signal in a bearish channel. As long as it remains this channel, where do we look for opportunity to sell? Not here. Sometimes you may see some opportunity on the media line to sell, but the best place is on the edge here. That's where we want to look for opportunity to sell. Sometimes you may see near the median, but you need to be very cautious if you want to sell here. You want to understand it clearly, okay? So as long as it's in this channel, we want to give priority to sell signal, but we don't want to sell anyhow. When you are selling, you are watching the next support level. The price moving from one level to the next level. Do not ignore the key levels on your left-hand side, end up selling anyhow and being taken out. That's not the right way. So you understand now the psychology of this, why it's bearish, and when it becomes truly bearish, if you receive a sell signal here at the retest point. Sometimes the price will not retest it. So nothing is intact or the same all the time in the market, and you may build a robot that will do it exactly. That's why we prefer a trading system when the trader understands exactly what is taking place, and he is controlling his own trading destiny instead of hoping that something else will do it for him. That's my personal view. You may perfectly disagree. All right. So here you see price display a higher high, but return back below the previous high is confirming to us that the bearish momentum is diminishing. It's saying to us, it's confirming to us, that the bullish momentum is diminishing. It doesn't say that the bullish momentum has ended when it crossed below this line. It's just telling us that it's diminishing. Now that we receive a sell signal here, it's confirming to us, in fact, that the bullish momentum is kaput until we return above the blue line again. All right? But, ladies and gentlemen, if, for instance, this company came out the next day after we received this sell signal here with excellent earnings, okay, 2 times the forecast, what will happen? Or they came out that they have increased their market share. They came out with, what will happen? The price will go up. Doesn't mean because we receive a sell signal that the price will definitely go down to the where we were expected to go. Pay attention to the economy news. Pay attention to the market. Pay attention to the global economy. Pay attention to the cycle. Do your due diligence. Okay. Be smart, like smart money. All right? That's what we are saying. Don't use the technical alone. Use the technical with the fundamental. Check the balance sheet, check the cash flow. Use the trading triangle, the market first, the sector, before the individual financial instrument, paying attention to the market leaders and the market itself. All right? You understand it now? Okay? So the next thing about the psychology or the bearish butterfly pattern, you can see that the price here went up, which means the bulls that were dominating the market, dominant force, positive, bullish. Pull back, no total retracement, around the 50%, 61.8. The bulls are still in the market. They didn't come out completely. Okay, good. Price tried to go up. Some bears still sell it. Those who sold it here didn't allow the price to come here again. They sold it. But as they sold it, they couldn't display a new lower low. This was the previous low. Though the bear who sold it here down, they sell it again here. But this time, the bearish momentum was not strong enough to display a new lower low. When we see a low and a higher low, we know that that bearish momentum, okay, is weakening. Repeat, when we see a low, okay, followed by a higher low, it's saying that a bearish momentum is weakening. So though they were selling here, they tried to sell it again here, but they couldn't display a new lower low. In fact, the price display a higher low. If we receive a signal here to buy, we will take it because we understand the language of the price. Our first target is not because we are expecting the bearish butterfly to be completed here. Our first target is the first and nearest resistance level. But look, it break through a big time. It break through a big time on this monthly chart. But you will be very cautious here. You watch this level and you watch this one also. But it worked nicely. So you can manage your trade. This is about managing the trade, managing the trade to squeeze maximum profit out of it without giving back your gains. All right. So you see now, finally, the bull take control and display now a new higher high. So you can see that the bear sold it. They challenged the bulls to sell it again, but they failed here. The bear failed to display a new lower low. Now the bull succeeded to display a new higher high. But look, they couldn't hold it to take it away. So here, the breakout crazy traders were buying. But they were taking out big time. They were taking out big time because what was happening here, traders that understood the bearish bad pattern, that are conservative, took their profit here. They had to sell. So they are the ones that were buying all this time here, you know, so they took profit. Other bear that understood also the bearish butterfly pattern came in and started selling. The crazy breakout traders, okay, how these people trade sometimes, some of them I think is crazy. It's their own money, I can't criticize them. They will try to buy, forcing up, and finally they push them down, okay. But then because the bull lost control here, because though they succeeded to display a new higher high, they failed to hold it, and the price finally came below the previous high. Now we will wait for the retest of that level. Sometimes the price may not retest it, which means just go down big time to the downside. You may say to me, George, it didn't retest it this time. So what? Sometimes it will, sometimes it may not. All right, so you see now? So this is about, okay, because the bull has failed to hold it here and more bear and profit taking take place, the price has a more chance to retrace back down completely. All right? You see now? Okay, so this is the psychology of, okay, the bearish butterfly pattern. Okay, I hope you have enjoyed this video also, okay, that you put into use, okay, to make excellent trading decisions. We are the TSTWSYS008 traders. Thank you for watching, and we will speak to you very soon.